European stocks approach new highs, and commodities are up after positive Chinese manufacturing data. However, fiscal cliff talk uncertainty remains as we head into the first week of December. I'm Nicole Urken, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Nicole Urken with theStreet, and together we bring you the morning call. Now, Scott, fiscal cliff negotiations, talking heads over the weekend, continued headlines, but the market seems to be digesting some of the continued pessimism and uncertainty. So when you're looking at the charts here, and we're looking at the move up, the digestion since the Thanksgiving rally, what are you thinking kind of going into, heading off December?
Well, it was funny on the Twitter sphere. Everyone was all worried. Did you see the talk all day? It looks like we're no closer to where we were with the fiscal cliff, this and that. And everyone was fear-mongering, say we're going to be down 4 handles, 10 handles, 15 handles. Meanwhile, you wake up this morning, there's a nice positive tone. So maybe the market's not getting as affected as we were a week or two ago because we're just getting used to it and we don't really expect much out of Washington. Washington seems like they always want to go into extra innings because it's, what's that term? Don't let a good crisis go to waste, so they can get as much attention on their party or make it look like they're smarter than the other guy.
Right.
P.S. I do think the market's been acting better, and hopefully, this will get resolved and it'll just happen when they want it to.
Right, and we're looking at the overall indices, but also we always talk about individual names. And some of the trading favorites or heartbeats of the market, Google and Apple in particular, have been doing really well. These are charts that you've talked about. We talked about last week that you should keep an eye out. So, they've had a nice move up. What do you think right here?
Well, talking about the market and powerful names, it's always good when they join together.
Right.
And if we go to the chart first, we'll get into the markets before we get into the individual names. Look at the chart of the S&P. Chart of the S&P looks really nice. We talk about inflection points. November. Remember November 16th, the outside day, the red dog reversal, the hammer bottom, whatever you want to call it, this was an inflection point. You never know what it's going to lead to, but look at the power thereafter. Then it digested, and then you were here last week. We talked about as long as we maintain above the 200-day moving average, we can see higher prices, and there we are. Nice little inside range. Looks like we're going to try and close above the 50-day. I think that's very important today. Can we close above 1421, 1422? And if we do, it opens the door for a bigger resistance that comes in around 1435.
Right. So, at this point, it's hard to get excited about jumping into the market. November 16th, we had that calculated entry, a really nice point to come in and ride for a while. But going into December, do you think that it's a little bit too
long in the tooth?
Long in the tooth is a good term to kind of hope for a real big rally into the end of the year, either to catch up with the averages or to supersede all of your investors' ambitions?
Well, there are a lot of people in a precarious situation because no one, thought the market would have such a big year coming into it, and then when it felt like when everyone tried to play catch up, that's when the market faltered. So I think a lot of hedge fund guys are not performing with the indices. Right now, I think we're up 12.5% on the S&P, maybe 15% on the Nasdaq, and I think you read publications out there, the majority of them are not there. So my suggestion is don't play catch up. You're going to put yourself in a worse spot. You're going to put extra risk on. You're probably going to blow up, and then your 2013 might be just as bad as your 2012. What I do think, though, I think that there's some room left. Okay, you want to stay with the rally. You don't want to fight it. You don't want to revenge it. There was a nice entry that Friday around 1355. Now we're around 1420. There's probably some room over the next, into the end of the year to get to 1435, 1445. So if you go back to the chart one more time, there is room to maneuver to put together a month. A close above here. I do think we can get to this spot, and or maybe a little bit higher. And if you look overall at the macro chart of the S&P. Now, everyone keeps fighting and everyone keeps talking about how equities are dead, but as a market timer, there's been a lot to like here. Here is your outside day on October 4th. I'll just skip right to this one over the summer, and then here you go again on November 16th. So 1, 2, 3 really nice times to maneuver your portfolio. We are coming into some resistance right here, but each other ones, took out the area. This took out this big resistance, made highs, pulled in, wound up taking out this resistance, made highs. So until that pattern changes, stop fighting it. Stay with the trade, and the trade will just be more conducive to bigger size, and you just have to manage it different based on the time of that market.
So perhaps we have to dive into some more individual names. I mentioned before Google and Apple. Maybe it's more interesting to play around some of these individual positions versus thinking about the market as a whole, although that's always very important as well.
Well, the day that we rallied, Apple was the one that was so oversold, and it was a great one to go to. So if we go to Apple first, you look right here, really nice move. This is when it pierced longer term support, and what that do, that stopped a lot of people out that didn't get out and see the sell signals the whole way down. From there, you had a really nice red dog reversal. This was a calculated entry, like you said, around 522. Then we digested and we took out this number, which was about 572. And now we're going sideways again. So I think it's gapping up today. If it can get above this 594-ish area, I think traders will probably add to positions, shorts will get squeezed. Then you have the 200-day at 600, and then bigger resistance around 610. So, I don't know if all of a sudden we're going to be taking out 700 anytime soon, but you have to learn how to maneuver these ranges. Get out of some risk, get out of some Apple when this triggers to the downside, or when it doesn't bounce well off moving averages, and then when it starts acting well, you get back in as an investor. People always say that, investing is the best in Apple. I think investing is, you've done very well in the last decade, but you can maneuver your position so you could sleep at night a little bit better.
Right. Now moving along, Apple and Google obviously have been very strong, but moving along to some positions that haven't been doing so well, we look at the quick serve sector, the restaurant sector. And Yum Brands has been the darling of the group, had really disappointing numbers come out last week, disappointing 2013 guidance, disappointing China comps for the fourth quarter. This was a big surprise, and obviously
were they expected to come out with that, or they just decided to?
Yeah, well, they have their Analyst Day coming up this Thursday, so this was kind of the announcement ahead going into the Analyst Day where they're providing more detail. The timing of these announcements is always a bit bizarre and confusing, and like you mentioned, this was a surprise. This was something that they probably should have guided to, or it's a little shocking that they had no indication that trends would decelerate.
Why were they so optimistic in the last quarter? Because I remember seeing the earnings come out, I saw it gap up, it held in well, I'm like, okay, this is a chosen one. Right. I don't really trade these names as frequently, but if you look at the chart here, nobody, in my opinion, was expecting that type of news, because look where it was at the highs here. You take a closer look here, this is, I think, last quarter, gapped up, went sideways, held a portion of this gap, showed commitment, started trending higher, closed on the highs here, and then pow. That is not a situation that breeds confidence. There are a lot of upset money managers here. So at this particular point, I would say watch this. If you're not in it and you're looking for a trade, maybe trade it versus the low here of 66.73. But I would say wait for a few more days, because if it could finally get above this, who knows, maybe it tries to fill this gap. But if this stock does not fill this gap within the next week or two, and it shows no one saying, I like it a lot here, look where it was, at 74, you're getting it on sale. If nobody wants it on sale, throw it in storage and get out of the way.
Yeah, it's key with this name to listen in on Thursday, because it's been a very strong name. Ultimately, they were comping 21% a year ago quarter. So to have in China, so to have negative Chinese comps is not crazy, because it's been so strong. They still have amazing unit growth, 800 new units in China. It's really been a strong play. So I think.
Do you like this dip to buy with this?
I think that we need to hear more on Thursday, and I think if we hear good commentary, it's an interesting entry point, because you haven't really had a pullback in this name for such a long time. We continue to get positive Chinese data. We got more over the weekend. This is a China play. Over 50% of its profits are from China. So if you want a growth story,
And you're not involved now, you could take the pain of the people that were thinking it was a great story at the highs.
Exactly.
Okay.
Exactly. So I think listen to Thursday. It's been a strong name, really good China growth story. And if you play it safe, a name like McDonald's, which is really, it's the behemoth of the quick serve group, that one is the playing it safe, consistent, steady over the long term, but has obviously not performed well this year, has continued to disappoint, also negative comps, competition, more exposure to Europe, which Yum doesn't have that large of an exposure to Europe.
What do they call the Cafe Royale? No, no, that's Burger King.
Yeah. It's just, apparently they're a lot nicer over in Europe. But, I think that McDonald's also was an interesting name here. Again, looking at the long-term performance, giving the stock some credit for the performance it's had. But from a chart perspective, it's had a pretty ugly run. So is this a nice entry point?
I think, like what you said, the expectations here are very low.
Yeah.
Yum, they were very high. That's why I was near the highest. McDonald's,
right.
Kind of been one of the kick to the curb type of big name stocks this year. So every now and then it changes. And like you said, you take these big names, you get a good entry. When there's no momentum and you want to fundamentally buy it, sometimes it works out. And if you look at the chart of McDonald's, at least you have a point of reference. Okay, here is your little outside day. It did come off those lows. I would say as a trader, You have a nice little downtrend. It's trying to get above. Look at this 87 and change. I do think from this entry point, you have room to get back to test this gap and hit this moving average. So, I would even say if you're looking to have some positions, if you're in the portfolio approach, this one could be a good entry here, and I think you have some room back to 90. It's come very far down to the, from where it was. So at this particular point, maybe since they're priced to not do well, it could surprise and get a nice little bounce. And it could be even maybe a little January effect type story where people took, tax loss selling or whatnot. So it could bounce, and that's a candidate for that there too.
Right. So no immediate catalyst here. Interesting valuation might be a good entry point. Buy McDonald's instead of a Big Mac, right?
There you go.
So expectations are really key. We always talk about that. And that's one of the reasons that Chipotle has had such a dog of a year, and that its peer domestic growth name, Panera, has had a pretty good one. The valuation differential was extreme because people were expecting double-digit comps consistently from Chipotle, and all of a sudden it kind of fell off. This is domestic growth, amazing story. It's had a huge run. And
there's a line around the corner. You still can't even get lunch at Chipotle right here.
Exactly. But right now, management hasn't really provided any clarity on a turnaround of accelerated growth. The valuation multiple is actually still slightly above Panera. And right here, again, these high growth names can be dangerous if you're not accelerating, if the momentum is not continuing.
Well, when you're involved with these names, when they have their run, it could be one of the most exciting, profitable times in the company's history or in the investor's history. But when the music stops playing in these high growth, high beta names like you saw in Netflix, 2 years ago, you see every now and then one of these names that has a very high PE doesn't perform, and then the momentum leaves, and when the momentum leaves and the uptrends that have been in place for so long break, you get out of the way, you don't ask questions. You look at the chart of Chipotle right here and you will see, first of all, this is when it gave you the eye opener. Look at this trend that broke. This was a trend that broke, following it, the 8 day, the 21 day, boom, lower high, and then, I remember this day. I remember when you had this potent wide range bar and everyone's like, what's wrong with Panera? I'm like, what's wrong is it just engulfed, Chipotle, it just engulfed this entire upper range. It's, showing some damage after breaking this, but PS, this is where we are right now in this name. I would say some traders are looking at it because if you're not involved in it, I would say day trade it, don't buy it, it's too dangerous. There's a lot of short sells in here too, but if it could start getting above, just say 270, you could see a quick move back to here, and if it starts to get above, 278, there's some room for a Christmas bounce. And like you said with Panera, not as many bad memories right now, and it has a nice descending channel here. It's above the moving average. I think you always have to be a little worried because there was like, what's going to happen next? What's the next stock in the group to blow up? This one hasn't yet, so this could be your stop right here at 156. And I would say as a trade, gets above 164 and change, it gets in motion to go back towards those highs. So this one technically looks a lot better, but it's a little lofty, and these names could be a little tough.
Yeah, I think we need to hear more from Chipotle. And also on your radar, keep on track this week, Investor Days from Starbucks, which also has some nice China upside, and Yum Brands, where we'll hear more about their recent trends. So we're going to take a quick commercial break, but we'll be back shortly, and we're going to go into the trenches with even more.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. Now, we were just talking about the quick serve names, some of the laggards this year so far, and now we want to shift attention to some companies that are taking their fate into their own hands, something you and I have continued to talk about. And in that regard, we're talking about M&A. We've seen a spike of M&A toward the end of the year, and particularly some really big deals over the Hurricane Sandy period where people were huddled in their homes, at least on the Northeast.
So nobody really saw them take place.
No one saw them. So we want to circle back to some of these names.
Okay.
And I think that kind of going into the end of the year, especially it being December, we want to think about your setup for 2013 and which companies are best positioning themselves and making strategic moves in the right areas. So the first one is a loved name. We were talking about McDonald's before, Disney. It's another name that a lot of people buy for their kids. People hold it over decades. It's a name that's been a consistent performer, but it's had a little bit of a difficult chart of late because of its disappointing quarter. People are worried about investment for next year. Lucasfilms was a very big acquisition. They're also going to be investing in their parks.
Right.
But again, balancing the long term and the short term, Disney's obviously positioning itself well. So what do you think of the name here?
Well, sometimes you have to take away the name and look at the chart, and if you did that in some of these, it's been helpful, but you can't always do that. You have to say, okay, this one just had a nice dip.
Right.
How do I get an entry? And if you look at the chart, you look, first things first, look at this trend from the low. All right, it broke. This trend broke right around here. Remember we talked trends? Look at this trend. Put your paper and pen. There you go. It broke right here. Tried to retest it, and then failed. High, lower, high, lower, high. So you take Disney out of the way, and you had some sell signals. Okay, there were definitely some sell signals in there. And what happened? So here you go. This was your gap down to the moving average, but people gave it a break. They said, look at this. Disney's on sale. It filled the gap. So I think that damage is not as severe because you saw people saying, I'm going to take advantage of this gap down, and it didn't stay below the gap and continue. So technically, it bounced back. I wouldn't say go out and grab it right now because look at the bounce that just took place, but I would say let it go sideways, let it build a new base right around here. And I do think as an investment, this is something you could buy the dip with. I'm sure they have huge things going on in the next few years in the pipeline. And technically, I'd say it went from just say a C minus to maybe a B minus as far as filling the gap and watching it for a better entry.
Yeah, it's interesting the market didn't give Disney the benefit of the doubt given its success with the Marvel and Pixar acquisitions. You would think, all right, they know what they're doing. But I think, given that their past success, both in terms of managing the company and on the acquisition front, it's an interesting entry point for longer term. So, moving on to a name that people are less familiar with, a name we've talked about a lot on Mad Money, it's Clean Harbors. And this has been a really strong performer over the long term, over the last couple of years. But this year, it's been a little bit of a difficult stock. People have originally thought of it as an oil spill play.
Right.
BP happens and then Clean Harbors comes in and cleans up the mess. And unfortunately, these kinds of spills have become more secular. Right. But it's actually transitioned to more of an oil and gas services company and really has positioned itself to more secular themes.
Right.
And it made the acquisition of Safety Clean over this Sandy week and had a big pop. And that's something we always want to look for. When you have a big pop on an acquisition announcement, it means, hey, this is probably a pretty good thing. But maybe you don't want to chase it right there.
No, with that said, you're right. You want to see a gap up, you want to see it hold. You want to see excitement and then
Right.
commitment to the excitement. And as I look at the chart, I think this chart technically, it changed its face. You talked about how it had a rough sledding this year, from the highs back in February all the way down. Well, look at, like you said, the excitement, the gap up. So you didn't chase that. You let it go sideways, you let it consolidate, it's holding the big gap. I think this is a tier 1 long, and it could even be a trade. This stock starts to get above 58.40, it will get in motion above this flag type pattern that saw a commitment, and I think this is in the game. If you want something to hold, you can hold it, put your stop in. I would say conservative stop would be at the gap, 53.44. It should not come back there to see commitment. And if it gets in motion, right here is your get in motion spot, 58.40. I think technically this one has changed and looks better.
And like you mentioned, we're still well off our highs for the name for the year, so it's not like you're buying it at its highs
Right.
after a big gap. Moving along, PVH Corp has been another name we've really consistently liked on Mad Money. Manny Chirico, the CEO, has come and visited us many times. It bought Warnaco back in, again, that Sandy week, and gapped up big there too. We've talked before about this name. It's just thinking December, thinking retail. It's just a good, solid one to come back to. It, managed incorporating Tommy, Calvin Klein. What do you think?
I think
Now
the chart
with
looks
Warnaco.
good, and there's high expectations here.
Yeah.
This one has been rewarding investors. This one's near the highs. This one, if you look at the chart, looks great, right? It's above all the moving averages. Like you said, you had the big gap up, and it held it. Didn't come in. People didn't take profits into it, so I guess they like the long-term story here, and it's holding higher. This one is probably something that winds up going higher. Strong stocks close stronger into the new year, and this one has been acting well, and it's rewarding investors. To enter here, for a new entry, you really need to know this story and like this name, versus if you're a holder of it, I think you just stay with it.
Yeah, take a look back because they've continued to beat and raise guidance. So when you do see that, you have to have some confidence. Again, it is at its highs. So maybe wait for a little bit of a pullback before coming in. And lastly, one more M&A deal I just want to touch on is the Hertz Dollar Thrifty recent closing. The rental car space has been an interesting one. We saw a little bit of a spike, Sandy related also, as there was some dislocation in the car market in general, people needing more cars. But this has been a consistent name. A lot of people were excited about Zipcar, But ultimately, Hertz and its peers actually rolled out these kind of shorter term rentals and deals as well. It's always about barriers to entry, and Hertz has a nice
they're everywhere.
They're everywhere.
You look
Scale
at the airports,
is the word
exactly.
I was going for. So
shelf space, if they were good.
Shelf space. Shelf space in the airports and beyond. So, what do you think of the chart?
I think it's acting well. This is not a name that, on the trading floor, everyone's going to be like, oh, let's go buy Hertz.
Right.
But you saw a wide range bar 2 days ago. So take a look here. Go to the chart. You'll see how you had a nice base, right? This was a gap up. It methodically filled it over time, but this is not like a sexy story. Then it held higher, and look at this. This actually was a nice trade if you were there. This is what traders look for. Nice tight pattern right in front of 15, and then it broke out, and now you're seeing some commitment. So it looks like institutions are getting behind this name. I've been hearing a lot, I'm just going to bring it up, about Ford, acting better and looking better, and even, I hate to say GM, these stocks, this group is acting a little bit better. That's actually General Mills. Oh, no, General Motors, I'm sorry. There you go. Actually, now that I just put it up, I'm just going to do it real quick. Here it is. Let me give you my little line. This stock looks like it can continue, which would be healthy for the market also.
All right, well, we're going to finish up with some quick hits. We often talk to have a real rally, you need to have some participation from the financials. Bank of America, key name, what do you think?
I like it, and I've been talking about it all year. There's been times when it's sexy and it moves, and times when you just have to forget you own it and just put it in the drawer. Right now is one of those times where I think you could focus on it. I focused on it a little bit. I think it's showing relative strength to the group. It's knocking on that door of 990, 995. I think if it gets through this chart, take a look right here. This thing gets over 10 bucks. You're gonna have a clean move. You go to this weekly chart. I really like this weekly chart. Look how tight this is. I talk about tight patterns. I am long. If today's the day, I'm gonna add to it, and you can see probably a quick move to 1040-ish. But overall, $12 to $14 for this stock in 2013, I don't think is unattainable. I think it's got a good chance of that.
Yeah, and we always talk also about animal spirits. Facebook has been an animal spirits type of name of late. What do you think into the end of the year? Really quick.
Really quick, we talked about buying this at 23 and a quarter, 24. At this point above 28, I think it's a trim and trail, but you don't have real resistance until about 30 to 32. Great targeted trade by a lot of people out there in the last week or so. Now to initiate here, it's a bit trickier.
And last but not least, Qualcomm. We talked about Google and Apple. Tech loves. Qualcomm is another tech name. What do you think of Qualcomm and the tech space in general?
They're in the right spot.
Yep.
And I know I've been trying to play that breakout above 62.80, which wasn't easy. And I'm still long it. I like the way it's acting. I think this is something, if you're having a portfolio approach, put it in there. It doesn't really trade great, but overall it looks like it's heading higher. Look at the chart right here of Qualcomm. You will see that, go to the daily chart. It finally broke above tight range. If you want to just see how consistent we try and be, tight ranges, above moving averages, puts it in the game. So right now, 62.80 was that spot. It looks like it's in motion. Next resistance comes into play about 65.45.
All right, well, another interesting week ahead. Keep trading around your individual positions. Look out for some investor days later this week. We'll keep looking for macro data, more fiscal cliff news, and stick around with us later on in the week. Thanks for joining.